Hey, what's up, traders? I hope you're doing well. It's a cold, windy, miserable day here in Australia where I live, but I'm in a good mood and I'm excited because this morning I woke up to this update from TradingView. This is super important for us as Pine coders. One of the biggest limitations of PineScript has been TradingView's backtester system and the way it tends to inaccurately simulate intrabar price action. I've recorded videos on this before. I'll include links to those in the description below if you're interested in what I mean by that. But today, the TradingView backtester system got a major overhaul, which has dramatically improved the accuracy of the tester system. This is music to my eyes, I guess, not ears, because I read this update, but this is super exciting to me, and I'll explain why in this video. Now, the backtester system is still not perfect on TradingView compared to other more complex systems, but it's light years ahead of where it used to be with this small but important adjustment that the team have made to this software. Now, I'll read the blog post and then we'll jump into the charts to demonstrate what this all means. Backtest more accurately with the bar magnifier. The catch here is you need to have a premium account on TradingView in order to use this feature. But believe me, it's worth it if you're a serious trader. Premium account holders can now obtain more realistic order fills in their strategy backtests by using the bar magnifier option. Now, in my opinion, this feature should be included on TradingView by default for free. It's so important to have accurate backtesting results. Otherwise, what's the point in backtesting if your results aren't being executed on accurate data? I just don't understand that personally. I'm guessing that there's probably a high computational cost for using this bar magnifier option on the TradingView servers, and that's probably why they're limiting it to premium account holders, because I'm sure they have millions of free users and they probably just can't afford to have this feature run on all free accounts. But anyway, this tool uses intra-bar inspection to obtain deeper granularity on price movement within a bar. You can tell that a programmer wrote all of this and not a trader. But anyway, allowing for more precise order fills. I'll explain what all of this means without the jargon in a moment when we get into the charts. But basically, when selected, the bar magnifier mode replaces the assumptions the broker emulator must make on price movement when it's only working with open, high, low, close values for historical bars. So this is purely for historical backtesting purposes. The intra-bar time frame used with the bar magnifier dynamically adjusts with the chart's time frame. And they have a table here which lists the corresponding lower time frame that is used on the higher time frame. So basically, let's use the 60-minute, for example. That's one of my favorite time frames. So I've only just found out about this morning. I don't fully understand this chart here, but what I think this means is that on this time frame here, so the 60-minute and 30-minute, and if these greater than, less than symbols are accurate, then this means from 59 minutes down to 30 minutes, the 1 minute time frame is used for intra-bar simulation. So we're simulating what happened on the lower time frames inside those higher time frame bars. And here, from the 4-hour time frame down to the 60-minute time frame, the 5-minute bar is used. So all of the 5-minute bars that printed within that 60-minute bar or that 4-hour bar are analyzed by the strategy tester to simulate how price unfolded. So to use a regular bar chart as an example, let me draw a terrible drawing here, just really quickly. Here we have the open price, the high, the low, and the closing price. What the strategy tester system used to do before this feature was added is it would simulate how this bar unfolded on the lower time frame. So this is a 60-minute bar that I'm explaining here. Obviously, under a 60-minute time frame, there were 60 1-minute bars that printed within that time frame or time period. And there were 12 5-minute bars that printed. And so within this hourly bar, price might have done this. It opened here, and then it might have gone down a bit. And then it came up and made a high, and then it came down again. And then it played around here for a bit, and then it had a big sell-off, and then it rallied and closed. And this is what the price movement looked like in this 60-minute time frame. And in the past, the strategy tester system did not do a very good job of simulating this. But now that we use lower intraday or intra-bar time frames to simulate this movement, what we actually have here is, instead of assuming that price opened here, went to the high, went to the low, and then went to the closing price, it will simulate 12 5-minute bars. So we'll have 12 of these smaller bars inside of our hourly bar being simulated by the strategy tester. And this gives us much more accurate data to work with when backtesting. I'll show you exactly what the main advantage of this is in a moment when we jump into the charts. I have a couple of strategy scripts that I've been bugged by the old strategy tester system, the way it assumed how price moved. Now I get way more accurate fills on my trades on intra-bar price movement. So I'll explain what that means soon. Let's just quickly go over. I don't think we need to go over all of this code because the scripts examples they use here are kind of terrible, to be honest. I'll show you how I use my scripts to demonstrate how this works. So let's jump into the charts right now. All right, so here I am with a couple of strategy scripts that I have added to my chart. This follow the bear strategy is a open source strategy I released on the YouTube channel quite a few months ago now. I think it was before PineScript version 4 actually. And I'm going to revisit this script soon in a future video where I'll show you how to add automation to the latest version of Pine Connector, because a lot has changed since I last covered Pine Connector. Mostly new features, but there are a couple of important changes to old features as well that we need to address for those of you who are interested in automating your TradingView scripts through MetaTrader at least. But anyway, this script here, I'm not going to go over the rules of the strategy. I'll do that in a different lesson because that's not important for today's lesson. What's important is, look at these metrics up here. So this script has taken 132 trades over whatever amount of historical data is loaded onto my chart here. I'm on the 1 hour time frame. So we have maybe a couple of months of data here. Return of around 39%, max drawdown of around 5%, which is pretty good. 62% win rate with a 1-to-1 reward. This is a really simple but great strategy. It tends to work best on euro dollar. I haven't really found any metrics close to this on other markets, so it is kind of curve fit to euro dollar, but it has worked for several years. So anyway, let me jump to a particular date where I know there's an example of what I want to show you guys here. You can see this purple background on my chart here. This purple background is alerting me to the fact that this bar, this big green bar you see here, hit my stop loss and my take profit on the same bar. And if you've watched my previous videos where I explain the limitations of the TradingView strategy tester and how it used to simulate, in this case, I can't remember how it simulates it, but basically it assumes that if price opened closer to the high, then it assumes that price opened here, went to the high, and then went to the low. Actually, it might be the other way around now that I think about it, because I have the use bar magnifier turned off, and this is being counted as a winning trade. So what this is actually doing is price opened here. The strategy tester is assuming that price went to the low, filled me on my take profit, and then spiked to the high. But that might not be what happened. And the reason it had to assume that behavior on intra-bar price data, so these lower time frames, it assumed that's how price unfolded, is because it only has the open, the high, the low, and the close to work with when it's simulating its backtesting on historical data. But now, with this new feature, this and I haven't added the code, 1 second. So if I jump back over here and I copy this line of code out, this goes in the strategy annotation function. If I copy this line of code and I paste it in here, don't forget to put a comma, save my scripts. So now I've added the bar magnifier functionality to my script, but it's off by default. Now if I come up to the settings menu and I scroll down to properties to the bottom, backtesting precision, use bar magnifier, this should be on by default. In every script you write from now on, every strategy tester script, set this to true by default and put it on every single script you write. Unless obviously you can't afford to have the premium plan. But if you have the premium plan, this is how your scripts will look from now on, okay? Because this makes our strategy tester results far more accurate, particularly in these situations. This is the only time this really matters. There are other reasons when this might matter, especially if you're using stop orders. But for me and how I write my scripts, this is the scenario that I am most bothered by. So now what's happening, if I go to properties and scroll down, use bar magnifier is turned on. Look at my results up here, my return and max drawdown when I turn this off. Now notice that changed slightly. I turn it back on, changes again. This little asterisk number up here in square brackets, the 3 with an asterisk next to it, this is how many trades across historical data, across the past 132 trades that this script has taken, that has hit its stop loss and its take profit on the same bar. And the strategy tester system, the reason why I highlighted this as purple, is to let me know that there are 3 questionable trades in my sample that may be giving me inaccurate results. So it might be counting a winning trade as a losing trade, or even worse, a losing trade as a winning trade, and giving me better results than reality in my backtesting data. So now, by turning this on, this bar, when the strategy tester runs on this bar, it is using 12 5-minute bars to simulate what really unfolded on this bar. And that gives me a much, much more accurate reading. And with this option enabled, I can be fairly confident, very confident, that this bar did hit my take profit before it spiked and hit my stop loss. It didn't open here and then spike my stop loss and then fill my take profit. That would be a losing trade being counted as a winning trade, which is the worst case scenario. If anything, we want more losing trades than reality, then more winning trades than reality, because otherwise we're trading a system that's not as profitable as it appears on paper, according to the strategy tester. But anyway, that's kind of the gist of this. I'm going to have to go into a lot more detail about this in practical examples in future lessons. I want to wrap this lesson up here. But for those of you who are interested, make sure to go and read the blog post, look through the example code there, add this option to your existing strategy scripts, and go and have a look at how it affects some of your results. It's really important that we get a firm understanding of how this new feature works, because as I've said, we need to be using this feature all the time. If I turn on a different strategy here, this one's slightly less profitable, 350 trades, 25% return with a 10 and 11% max drawdown across that sample size, 11 questionable trades here. That's a much larger sample than the other strategy. Let's go down to properties here and turn use bar magnifier on. Keep an eye on my results when I do this. When I turn this on, these 11 trades that hit their take profit and stop loss on the same bar will be more accurately simulated, and trades that lost that were counted as winning trades might flip to being counted as losing trades, and vice versa. So let's click this button and watch what these metrics do. There you go. They didn't change very much at all, but they did change. So we have a bigger drawdown and a slightly less return. So that's important information to know. This strategy is not quite as good as it looks when we're using the old strategy tester simulation. The new strategy tester simulation, as I've said, is not perfect. A perfect system would analyze intra-bar price data on a tick-by-tick precision, but this is the next best thing. This is, for most strategies, this should suffice to give you much, much more accurate results. And the trader in me is really struggling not to notice that this price is reacting off a key support and resistance level. I kind of want to trade this right now, but I feel like I've missed the setup, so I'll leave that alone. But anyway, you get the idea. Let's wrap up this lesson here, and in a future lesson, I'll go into more detail about these subjects, this new feature. For now, I wish you the best of luck with your trading. Take care, and I'll speak with you in the next lesson.